Hey guys, Mike here. So obviously I'm sure you're hearing through Twitter and stuff that we closed below the June 16th low, which is actually not true, by the way. I'm going to show you that on the chart. What they mean is what June 16th closing number was. Yes, we closed below that, but what was the low of the day on June 16th? We have not broken that yet, and I'm going to show you that on the chart. But then we're going to go over some important stuff that I'm watching like a hawk right now to let me know where we're heading, and also something you're starting to hear a lot more of. I'm going to show you a really short snippet of one of the biggest bears in the market, and he's been right so far, by the way. Salute to him. But what he had to say, I'm going to show you exactly why him and his firm are doing what they're doing right now. So pay attention to that. But if you look at the chart right here, you can see we still have not broken that trend line right there. And you can see on the RSI below, definitely getting into way oversold territory at this point in time now. But, you know, I'm seeing on Twitter, oh, we broke the June 16th low, and they're right. On the closing number, we sure did. But when we go back, you know, we did not. We click on the 30-minute here. We did not break the actual low of the day on June 16th. This is where that trend line actually touches at. And I do throw a lot more weight to, yes, what is the closing number, but also to me, yeah, what was the low of the day that we fought back from? Because to me, that's going to be key, and you're going to see that battle play out. And just so you can see a little bit closer up here, you can see what I'm talking about here on the SPX. It says right there, plain as day, 52-week low, 36.36. The day's range, though, the low was 36.44. We did not break that number. We just closed lower than they did on June 16th. So it depends on which one you put more credence on. And certain things I'm going to be watching like a hawk right now are, you know, basically these 4 or 5 things right here. I've showed you this many times. The HYG, which is the high yield bonds we're talking about, risky investments and stuff like that. But you can see it broke below the trend line that I showed you. And you can see what's happening on the hourly, though, when you break it down. It looks like the SPY or the S&P is doing what? It's trying to recover on the hourly, right? It's flattening out. But what's the HYG doing? They're like, still selling off, still going down. So I want to see, does the S&P turn up and the HYG turn down? So I've showed you those divergences before, and it never does signal a good thing because the bond market obviously deals in debt, risk, and stuff like that. And so we'll see what happens on that. And if you look, the reason why that trend line is so important, it goes all the way back to 2000, and I believe that's 19 right there. And so the last time it broke it was during the 2020 crash. And so here we are once again breaking through it. So we just got to watch and see, you know, what the bond market is actually telling us. And another thing I'm watching is 30-year mortgage rates, which I just wanted to show you this chart honestly because it's unbelievable. But this is year-over-year change in 30-year mortgage. Look what that thing is at. That is unbelievable. Look at going all the way back before the dot-com bubble. Look what this line is. Look how far we are above the year-over-year change in the 30-year mortgage. I mean, that kind of shows you how low, one, we held the rates for years, but how low they were during 2020 and 2021, right? And what's happening right now. The other one, of course, is going to be copper. You know, surprisingly, when it took that big plunge, it started to recover, and it's kind of been sitting here and just consolidating in this price range right here. And so obviously as the economy slows, usually you'll see copper drop off a cliff because copper's in everything. And especially you're going to see, this is what you're going to see if the real estate market goes to hell in a handbasket like some people are predicting because of the slowdown, then obviously copper prices should fall off a cliff right on with it. Plus look what's going on in China, right? They use more copper than anybody. And there's some other things I'm going to discuss about that. But if they slow down and we slow down at the same time dramatically, then you should see copper fall off a cliff, but sometimes you'll get to see it before that happens. And the other one's going to be earnings, but obviously there's not a whole lot going on this week. But I did want to point out Micron and Nike on Thursday. I think that's 2 big ones to watch for you right there. One semiconductor and one's shoe apparel and stuff. But I'm looking to see, obviously, do all these earnings, what are they telling us? Right? Do you see a major slowdown? Do we see companies coming out before earnings a lot during this quarter and start saying, okay, sorry, let's go ahead and take our medicine now and take the hits. We're not going to make it, right? Or is that delayed till the fourth quarter? That's what we got to see. We thought it was going to be second quarter. Didn't happen. Is it going to be third quarter? That kind of stuff. Or are we still spending like crazy, like we shouldn't be right now, but we are, right? And remember, I showed you the stimulus going out. That's going to affect this too because people are going to spend it, right? Maybe on power bills, maybe on rent, whatever. But some people, because they can't manage money, they're going to go out and spend on stuff they don't need. That's how our economy goes, right? And please hit that like, subscribe button and share the video if you get a chance. I certainly appreciate it. But another thing I'm going to be watching is the manufacturing data coming out to see how much that is slowing down. That's going to be another key, and another thing a lot of people, not just me, but a lot of people are going to be watching this stuff for, to give us an idea 3, 6, 9 months out of what is happening. Now, the other thing I was talking about is there's this guy his name's Dan Ives. I watched him this whole year, and he's been right the whole year so far. And, when people are right, some people are right in bull markets and be right in bear markets. Well, he's pretty much known to be very bearish, right? It's his reputation, but he's also very blunt about it, and he makes no apologies, so I like that. And, I've seen him many times when June 16th happened, it was rallying. He said, hey, we're participating in the rally, but we know what it is, right? And so they're big on shorting, big on staying in cash. And so I like to hear, sometimes when he comes on, what is he doing, right? And so here's what he's doing, and then I'm going to show you why he's doing it.
Overall, it sounds like you're negative the markets, but you think maybe a bear market rally is upon us soon?
Yeah, I tweeted that out on Friday. I mean, if you look back at our Twitter account, several times during this year, we pointed out when we thought the next bear market rally would start. But we pointed out we think the S&P ultimately goes down to 3,000. We've been saying that since May. We started the year thinking the market would be down 20%, revised it to down 30 to 50 with 3,000 as our estimate. But you get these bear market rallies along the way, and over 70% of our technical indicators was flashing oversold when the market was down about 2.4% on Friday. So we try to stay disciplined, even though, Mondays you get big crashes a lot of times following bad weeks, bad closes, but you should expect that. And so covered our shorts today. We'll probably add to our longs. We're still sitting over 50% of the portfolio in cash.
Now, I don't know what his indicators are. I don't work for his firm, obviously, but they have a lot of them. But I can tell you, I know, no doubt in my mind, what a lot of people are looking at is this right here. And I put this out Friday to the members in the private video, kind of showing them this stuff. But if you look, this is NASDAQ 100, stocks above their 200-day moving average. It's falling off a cliff, and it's below this line right here. Anytime it gets below 10%, you see major rallies. That's June 16th right there. Bam. Right? When it gets below that 10%, and it's below it now, right? That right there is 2020. The other one's going to be 2018 to 2019 sell-off that happened. Bam, it spikes. And no matter where you go, as soon as when it goes below 10, and it can go all the way down to like 1% or whatever. That was 2008 right there. And it can stay there in major crashes. That's when you get to see these bounces. And here's another one. QQQ divided by SPY. So risk versus value. I showed you back here. It bounced before the June 16th rally. And you can see it is holding on to that stinking trend line, man. It just bounced, 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 bounced. And then the other one is stocks above their 50-day moving average. Look where it's at. I mean, that's a huge gap down. And when it gets to this level, around that 10% level, that's when you see, ignore that little sign saying the bottom is in by heavy, please. Don't look at that. But, you can see when you get these major sell-offs, when you get below 10 on this one, it's another one. It's just, it rarely happens. But when it does, and it may take time, you get to see a major rally. And the last one is this Fear and Greed Index I actually like to follow. It's peer investing, I think it is, but it's at 5% right now. That rarely happens. It happened June 16th, and when it got down there, boom, you saw it move up. But anytime we go back on this thing, you'll see when it gets, again, below 10%, it can go all the way to 1, 2%. But when you get down below there, and I'm going to pull a few up. So let's just pull like the 08 time frame or whatever. It got to like 4.3 right there. If we go to like 2018, 19, you can see we got all the way, let me pull this in real quick, way down there, like 0.6. And actually 2008, you got way lower than that. It got to about 0.6, but it can get down there, right? But it lets you know, and there's 2020, as you can see right there, got way down again. But what happens is, it just is one of those things where Dan Ives knows, and it's a bet, really is what he's doing, but he's playing the odds, right? All his indicators are going off because he knows how the algorithms work. He knows how the market works, been around a long time. And that's just how they play it. Don't mean, like he said, don't mean they're not wrong at all. It's just, that's just the indicators, certain indicators he uses. I like to look at these, and we've seen that many times. And I showed you, what was it, a couple weeks ago, when we got to 86% on this same Fear and Greed, and I said, whoa, this worries me. This ain't good, because I showed you when it gets up to certain levels, it's just never fail. It's hard as it is to believe. It just, I don't know what the deal is. That's the algorithms are programmed to do. People are programmed to do, whatever it is. And so, I feel like we're two different places. One, we're at that place where we are going to get the short-term bear market rally, whatever it's going to be, whether it's 2%, 5%, whatever. Or are you going to get this just cascade of selling, right? That capitulation where it just falls. I mean, you feel like it's falling in a straight line. The world's come to an end type of feeling. So I feel like we're at those two kind of moments right now in the market, because everybody's just, you see them coming out full drove now, talking about what's going on, like it hadn't been going on this whole time or something, right? But, you know, that's where we're at. At least I want to show that to you, what I'm watching. Let me know down in the comments what you're watching, the indicators you use. And so, you know, and the way I'm doing the market is I'm not worried about the longs right now. It's just kind of, one, being in cash, preserving capital, making nifty trades here and there, just like we did when I showed you and I played it on the FOMC meeting. Just certain things coming in and out of them, trying to be nimble to increase capital. Anyway, increase capital, that's for sure, because this is the time, man. Like, if you're not increasing your capital right now and your reserves and planning ahead for this thing, like, this is that time. It may last a while, but this is that time. If you got some kind of comic books you've been holding or baseball cards, you know, may want to check the value on them, because at some point in time you may want to cash them in, because you can't buy stocks with them, but you can with the cash you can get for those, you know. I mean, I'm just joking, but seriously, in a way I'm not joking, right? Put a lemonade stand out front or something. You know, a great moment to teach your kids, like, hey, how much money you got in the piggy bank? It's maybe a good time coming up here at some point in time to start getting you in. Start saving for that college fund now, right? I mean, this is when, assuming we actually recover, and there's no guarantee, the world might come to an end, might go into a Great Depression like some people are calling, might happen. You know what, though? I'll be danged if I'm living my life that way, right? I'm planning for the recession. If we go into a Great Depression, you know, then it is what it is, right? It's all for naught anyway. But I'm not going to sit here and live that way. I can't. I'm all about the data. And if it says we're going to Great Depression, I will tell you guys that's what I think. And obviously, who knows? But let's get to the recession first. How about that? Let's say we get a recession, then we'll start talking depression or something. But, you know, I don't watch those channels about the world coming to an end and the stock market's going to go to zero and these bigger bubbles are going to burst and we're all going to be broke and the banks won't give us our money. I don't know how you live your life that way. How do you get up? How do you go to sleep? You know what I'm saying? The stress levels got to be unbelievable for you. I mean, so I can't do that. So, you know, I'm going to go ahead and stick with my plan, what I'm doing. But I just want to show you this. Let me know what you guys are doing. And that's it, guys. All right. Until tomorrow, we'll see where we go from here. Just buckle up. It's going to be volatile. It's going to be a very interesting year, to say the least. So have a good one, and I'll see you tomorrow.